Hello, and hope you're doing well this hour, and we'll be with you with the European Central Bank meeting review, its decisions and market reactions. As always, first let's check what we had as a data and the decisions, and then we can check the market reactions as well. So the Central Bank of Europe or European Central Bank, ECB, cut the rates by 25 basis points in line with the expectations. There is no change with expectations, no surprise. They cut the basic basis, the prime rate to 2%. Uh, Also, for the APP and PEPP, they decided to no longer invest the principal payments for the security. So that's which means that the central bank of European Central Bank taking a little bit more dovish policies for now and trying to support the economy and trying to support to give the money to the market and let the money to move through the different businesses, and that can help the economy to increase. For this matter, the central bank mentioned that the main reason of this decision is because that inflation is moving towards ECB targets, and there is no surprise for the inflation. Even though they lowered the inflation expectations for 2025, 2026. Inflation expectation for this year average is declined to 2%. For 2026, declined to 1.6%, and for 2027, they lowered the inflation expectations overall, the headline inflation expectations to 2.2 towards 2%. That's not 2%. So generally, they lowered or they eased the inflation expectation by 0.3% generally. So that means that the central bank is expecting, but at the same time, they lowered the GDP growth as well. They lowered the expected GDP growth for 2025 to 1.9%, lower than 0.9%, lower than 1.1% in their March market expectations. Also, they lowered 2026 and 2027 GDP growth to 1.3%. 1.1% for 2006 and 1.3% for 2007. That means that generally the central bank in Europe expecting lower inflation and lower GDP growth as well. However, excluding the food and energy, the core inflation expectations didn't change, and they still expected the core inflation around 2.4% this year, and for next year is also they mentioned 2.4%, and for the next year 1.9% for 2006 and for 2007. That's generally what happened and what was the decisions that we have. So there is no surprise, but the surprise is a lower expected GDP growth, which means that the central bank will have more reason while the inflation also is under control. So the central bank will have more reasons and more support for dovish for continuing the dovish policies. So that's what happened as a decision. So let's go and check the charts and see how these charts, how does that affect the charts. As the chart, as you can see here, this is a Euro USD chart. Euro, while the decision was dovish and we were expecting to see the Euro slightly lower, so which means that the Euro USD could go slightly lower. But at the same time, you can see that the Euro increased. But the main reasons of that is because the weakening US dollar index. The US dollar index at the same time that in line were the stimulus with the European Central Bank decision, we had the labor market data from United States, which showed that the labor market slightly getting weaker with 247,000 newly expected, newly applied for unemployment rates, unemployment benefits, which put a little bit more pressure on the US dollar index. So, however, that's for because the short-term reactions, because tomorrow we're going to have the NFP numbers. Tomorrow we'll have another video. We'll talk about the NFP numbers. So that's why we can say for now, what we can expect from the market is that the inflation is somehow under control in Europe. Economic growth is weaker than expected. So which means that generally these data can support the dovish policies, which can generally put the pressure on the euro and support the European stock markets. We can see here that the euro 50 slightly increased after this decision. Euro against US dollar somehow is flat because, as mentioned, because of mostly weaker US dollar. But generally, these data, if tomorrow's inflation, tomorrow's US labor market gets a little bit better than expected, we can say that the euro USD can change its currently upward trend to slight downtrend. So tomorrow we expect to see that the euro USD to close a little bit lower if the labor market data from the United States can beat the expectations. Otherwise, euro USD can go further, and 1.50 would be the next target for euro USD. 1.30 right now, somewhat around here is the K, like somewhat around here is the K pivot. As long if, especially if the price moves, if this euro USD targets like this price moves under 1.30, then 1.10 again will be in the horizon. But for now, that generally we expect some for the euro USD, we expect these side movements, not expecting such a big move towards higher, lower levels or lower levels. So somewhat around the 1.30, 1.50 can be our targets for at least for the next 1 or 2 months. So there's no big, we are not expecting a big movement in the euro USD chart. As for the euro stocks, euro 50 had a positive reaction to this data because expected dovish policies, but at the same time, we shouldn't forget that this good news is because of the bad news. It means that this dovish that we have, this uptrend that we can see in the stock market is mostly because of mostly because of the bad news that we have in the weakening inflation is that we had right now. So which means the bad news is the good news. So that since the bad news is the market mover, we don't expect to see such a big towards a higher level. So the stock markets, despite the current short-term positive reaction to this data, we are not expecting to see this trend to continue for longer term. So the side movement, and again, downward can be the overall expectations if we look at in the bigger picture. Like if you go to the daily chart, after this correction, that reaction, this recovery, we can expect to see again the same downward, even with the downward which we had in March, but with a slightly lower piece. But generally, the stock market for the European zone is not such a big, doesn't have such a big and positive outlook for now, considering the ongoing trade tensions that right now we have and overall condition that we have. But still, I mean, the downward wouldn't be that such a big, I mean, the shape of the downward wouldn't be that shape, but still, we expect the side movement with a little bit pressure on the mid and longer term for the stock markets, considering this decision. That was what happened in the European stock market and the euro chart after European Central Bank decision. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.